In fact, keeping it with one more theme that would determine how earnings pan out is what happens with rural demand, and rural demand is closely linked with what one can expect from monsoons this season around. After SkyMet's monsoon forecast, Agri stocks have been buzzing. Let's take a brief look at the factors and see where the largest players are placed. Pranay joins us with that analysis.
Well, Tanveer, after SkyMet's recent monsoon forecast of a normal monsoon in June to September period, agri stocks have been buzzing. And that's the domestic factor. Even globally, the majors have said that demand is reviving after 3 years of degrowth in the global agrochemical industry. And this year, they're expecting a growth between 3 to 5%. So that is an important part to watch, which is why, stocks such as SRF, which is a large global agrochemical supplier, has been buzzing. Also, another factor is the continued structural shift where we are seeing capacities getting reduced in China for all these inputs moving to India. So that is clearly favorable for prices and margins as well. Which is why when you look at the largest player, UPL, it is actually truly an Indian multinational. Got included in Nifty 6 months back as part of the semi-annual revision. Is the only agrochemical company to be part of the index, has weightage of about 0.7%, accounting for the entire sector. And actually, the character of Nifty has been changing a bit for the last couple of years. Ever since infrastructure, for example, found prominence after L&T, you saw Adani Ports getting included a couple of years back in September 2015. Thereafter, you saw UPL getting included 6 months back. And now in the recent change, we've seen even Bajaj Finance from the NBFC space and Titan, for that matter, from retail. So clearly, the character of Nifty has also been changing of late. If you look a bit more at UPL, its track record has been great, consistently growing at about 15.5% compounded for the last 5 years versus global agrochemical industry at about 2%. Its margins also have improved from 15% a decade ago to 20%. It's been growing consistently and steadily. It's geographically very diversified, 50% coming from developing areas such as LATAM and India, 30% coming from developed markets such as North America and Europe, and the remaining from rest of the world. Also, its ROEs are pretty robust at about 20% plus last year. Debt equity is also solid at 0.3x. So clearly no problems on balance sheet or that. In fact, a global generic opportunity is opening up for it given the consolidation and mergers that we've seen in the last 1 year. There is a $3 billion post-patent global opportunity for where it is the second largest player, and therefore that is the most important development for this company to watch. Lastly, I'd like to end with, if you held the stock a year back, you would have gained a return of just 3.4% versus 11.1% for Nifty. But 5 years back, had you invested 1 lakh rupees in this company, it would have risen 6.4-fold to about 6,40,000 versus Nifty, which would have given you just about 1,80,000 in a Nifty proxy fund. So clearly, this kind of growth is expected even going forward, according to analyst estimates, being valued at 17 times 1 year forward with an average target price of 950.
Okay, now that's the screen. I want to remain with this graphic, because the point we're trying to identify here is that we may be crying about what's happening to the Nifty, 10% down on the Nifty, but we discussed MRF 2 days ago, we talked about Maruti, but today we've got UPL, and the reason why we're talking about UPL is that if you look at the last 1 year return, it has done nothing, but in the last 5 years it has given you returns which are disproportionately higher than that of the Nifty, and even in the last 10 years it has given you returns which are more than 100% that of the Nifty. So if you buy a good business, hold on to that good business for a reasonably long period of time, 3 to 5 years, your chances of creating wealth and beating the benchmark is very high. But you need 2 preconditions. One, you need to be patient. We should not look at daily price movement, and then your time horizon has to be minimum 3 to 5 years, because in 3 to 5 years, if the business is great, markets will recognize the potential of that business, and then you actually will see market rewarding that kind of a business. 5 years ago, nobody cared about UPL. The business got re-rated, and the outperformance, I think, has really been substantially higher and stronger in the last 3 to 5 years, given that some of the global acquisitions have really kicked in very smartly.
Yeah, okay. That's UPL, while in the last